Good morning, all. Camelback Trading 2724 coming to you this Friday morning, April 17th. We're looking at the market profile partial from yesterday of the SPY ETF here on WindoTrader. And as you can see, where we're trading on a very, very large gap at an incredibly visual level, my line in the sand, that 287 level. Speaking of WindoTrader, first I want to give a sincere thanks to Terry Lieberman and WindoTrader for including me in that webinar on this market volatility. Very honored to do it, and just want to say thank you very, very much. Now, let's get to what's going on today. Well, first off, if you remember, we had a bad tick up at the 284.17 level the other day. It was $10 higher from where we're trading. Well, it's getting taken out. If you also remember, a couple of days ago, we had a tick to the downside that was $10 lower from where we were trading, and we got that the next day. It's incredibly incredible how these bad ticks get resolved sooner rather than later. We have 3 left on the docket. One is a lot higher up at the 333 level, and there's 2 below. It's one at around 265, one at 248. Sure, they're all going to get hit at some point. The question is when. Okay, so let's talk about what's going on this morning. Now, first thing you're going to hear from most people are gap rules apply. Well, to me, gap rules apply with context. All right, if you just take gap rules applying, that would mean once we open this morning, if the gap doesn't fill right away, you have to go with it and be long. Now, a gap of this magnitude, which right now is approximately $7, I don't expect it to be filled right away. I also don't want to be buying $7 high from the previous high at a very, very visual spot that I would think the bears are going to want to defend, at least initially. If it opens and goes straight up, so be it. I missed the trade. But the odds of a counter auction with a gap of this size, the odds of a counter auction because we're at a very visual point, to me, are pretty good. So I'm not going to go with gap rules. There are no coincidences in trading. So where we're trading at 287 level is very visual and is very mechanical, and it tells you that short-term traders are involved. We're coming out of a 5-day balance on a gap, and we got to a point where the algorithms are happy to play. So, upside destinations right now. First one on the upside would be the pre-market high, which right now is 288.13. Then above that, we have 288.52, which is a weekly high, and then filling the gap at 290.23, a 171-point gap from March 9th. And above that, we have 295.07, 9 wide from March 6th. Remember, we've talked about these voids, right? We had one when we were trading in the 250s, I believe, right? We had one up to 271. We finally came out of balance, and we got it. This is another void we spoke about up around this level. We finally come out of balance. We get it. It's also going to be right at the 50-day moving average. For the downside, right now our first downside destination, and again, we're just over an hour to go prior to the opening, would be 285.54, which is our pre-market low. Then below that would be yesterday's high of 280.03, filling the gap. And then we wouldn't have anything until the 9 wide at 278.61. Remember the little nuances yesterday, right? Once again, the market was telling you something the last 2 days. Here's the gap from yesterday. I'm looking at the wrong day. The market, I had the wrong day up the whole time. Here's yesterday's high. I apologize. The market was definitely telling us something these last 2 days. We tried to push down on the 15th, kept getting rejected, especially that F low. Then yesterday, again, talk about mechanical and visual. B's low to the exact tick of F's low from the 15th. That was our low. Came down in G within a couple of ticks. Couldn't take it out. Right? The market was telling you something. Sellers couldn't get anything going. Or, to put it in a better way, the algorithms didn't want to push lower. Right? Long-term traders are blowing right through those levels. Algorithms did not want to push lower. And then what happened? last time frame we raised our POC to the highest it could be. That's kind of rare to raise the POC in the last time frame or to lower the POC in the last time frame. Little nuances. And then this morning, we're all the way up here gapping. I apologize for having that wrong day in there. I wasn't paying attention. But the destinations are the same, right? The 9 wide is 278.61 down here if we are to fill the gap until we get more market-generated information. So what's the game plan for this morning? Well, like I just said, it's a tremendous gap. I'm not being a buyer up here. Now, for me, I might actually take a small put play at the 287 level. I've called it my line in the sand for over 2 years now, right? It's 2 years and almost 4 months. So I don't think sellers are going to give it up that easy. Plus, we're going to be, when we look at the charts, right at the 50-day moving average. Am I taking a 100 contract put play? No. Maybe I'll take a 10 or 20 play, depending on where we open. I mean, if we come in $1 or $2, no, I'm not going to do that because I fully expect to go up and test it. But if we open around the 287 level or higher, I would probably take a 10 or 20 put contract to see if we get some sort of counter auction to take back some of this gap and to see if they defend the 287 level, at least initially. I'm not telling you that's a trade everybody should take. We're going to be gapping. We're going to have higher value, but that's one that I may take based on that. Am I going to be buying calls up here? No. What am I looking for? Well, my pre-market low is 285.54. Let's see how we get down if we react at that level. Let's see how we taper off if we do get a counter auction. Let's see what reaction the market does, right? The opening is very important. You see the stock open, and we go back and forth through it a number of times before we get a direction. So those are things I'd look for to take a call play if we were to come in. And then let's go to the charts. Monthly. We said last night we closed right around just above that 278 level. Well, we're well above this trend line right now. However, two things. We are still one-time framing down, and today is only April 17th. This is not telling me we're accepted above the trend line yet, right? It's a monthly chart. That's why it takes longer to know if it's accepted. So it's a nice step in the right direction for the bulls, but it's certainly not telling me we're accepted yet. Weekly. So here we are. And again, there's a lot of new people that have joined my room and follow me on YouTube. Why is 287 so important to me? Well, we have to go back. We had an outside month up in September of 2017 and basically went straight up to that point to our all-time high at the time, right? 286.79. And again, I round things out. So got up to 287 in January of 18, only to see February fail to take it out. I'm sorry, to see, this is a weekly, to see the next week fail to take it out, and a week later, we were down at 253. So we went down $24 in 2 weeks. And then we balanced from February of 18 to finally getting above it of August of 18. Right? So it took 7 months to get above it. But look what happened. We only stayed above it for 6 weeks. Got below it in October, and then look what transpired. We balanced after we went down, balanced, and then we had the carnage in December of that year. Now, we didn't stay below that 253 level for long, got back in it. And then from January of 19 to March of 19 it took, got above it again for a little while, then below. It was a whole process until we finally got above it. We balanced between the 287 level and the 297 level for a bunch of weeks until we finally exploded to the upside. And for a while, I was like, okay, we're finally away from that 287 level. Well, not so fast. After we put in our all-time high, it took 2 weeks to come down, right? Look how we tested it on that first trip down. We got to 285.54, but closed above at 296.26. So we dipped back into that huge balance, but got back in it. Inside week, and then below it, and you saw the results of that. So now we're right back to this critical level. So again, now, if we close above it today, is that acceptance? No. One day doesn't make a market. 1 week doesn't make a market, right? Look what we did here. We were above it for 6 weeks, and then look what we did. So I'm going to need some clear indication of one-time framing up, getting distance away from each other to prove that it's accepted. Look at these 6 weeks we were above it, right? We talk about how if a trend is healthy or young, if you're getting distance away. We got no distance. 6 weeks in a row, we really didn't get any distance. We basically traded in balance. Same here. It took a while. But then finally, right, we were in balance. We bounced between it and there, and then look what happened. That's the acceleration you want. So that's very important to me. And then on the daily, 5-day balance, right? Just like here, we had that 4-day balance. The highs there were 263 and the 271 was the void. And then we failed and went down. And then lo and behold, we finally got above it and popped right up to 271. Well, once again, 5-day balance. Now we're popping above 284.90 is the top of our 5-day balance. We're above it right now by $2. We're going to be clashing right with the 50-day moving average when we open. So it should be pretty exciting to see how we react at the 50-day moving average and that 287 level. Have a great day trading. Good luck. We'll recap the day and the week at 4 p.m.